Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 12th, 2010. Well, folks, we are seeing a nice solid down day on Wall Street here across the board. We have the Dow down 62 points, the Nasdaq down 33, which is 1.5%, and the S&P 500 down 12.5, or just a little over 1%. So it's a strong sell-off across the board, folks, and this is all coming from Alcoa's earnings. This is really where it stems, guys. We saw some warnings coming out yesterday. We saw Alcoa's earnings coming out. They missed actually pretty ugly. Their revenues beat, but the costs of their, kind of producing what they produce, the aluminum, the metals, very, very high. That took away in a major way from their earnings potential. So again, they beat on revenue, but their earnings, the whisper number was 15 to 18 cents. The estimates were 5 to 6 cents, and they came in right around a penny on the earnings side, right around that level. That was very, very poor for this market. And again, a market that is priced to perfection, any sort of blip in the screen is going to cause a major sell-off. Now, the key is here at In the Money Stocks, we had warned our premium subscribers based on the negativity that we were seeing in the charts to be on the extreme bearish side. And again, I went fully bearish as of Friday. Going into Friday, I went fully bearish. Friday, Monday, Tuesday, here we are Tuesday with a nice solid sell-off in this market. In addition, right into the beginning of the year, I had been slightly bullish based on new money flowing in and then neutral midweek. And then again, as I mentioned, going fully bearish. And again, we give this all to our premium subscribers in the Research Center and in the intraday stock chat. You can join one, join both, you name it, it's there for the taking. Key calls as well, guys. Huge money being made in the intraday stock chat today, whether it's scalping or the swing trades. In addition, the Research Center, folks, my premium subscribers knew that I had loaded the boat on many, many short plays here over the last week or so and taking the profits a little bit here and there today, ultimately looking for a little bit more downside over the next few days. Now, again, the market here gapped lower to the 200 moving average. First hit of the 200, you have to look at it as a little bit of a bounce. In addition, second candle of the day, you got a nice bottoming tail. Now, a bottoming tail is a very bullish signal for the market. So you get a bottoming tail like that, chances are the market's going to pop back up. Sure enough, it pops right up to this trend line. Now, this trend line is actually a parallel line from this line up here. Scanning back, you can see you're just taking this line right here, connecting it through the low range here, and it also happens to coincide with this parallel line above from the beginning. If you go all the way back to the 4th of January, which again, the first day back really in the new year, take that, connect it through the high on the 5th, connected to the highs on the 6th right here, connected to the high on the 7th. That line again is parallel, so it makes sense. The symmetry of the market will dictate that you're going to have resistance right here. In addition, you have a blue trend line, which marks the low from yesterday. That will also be a significant point of resistance. That's where the market went off that bottoming tail, right up here, and then you start to look for a reversal. And the market sure reversed, folks. Really selling hard. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 down or flat candles before you even got somewhat of a little bit of a bounce. Getting a little minor bounce at this point to the upside, now pulling back. Right now, this would be considered an in spirit of bear flag pattern. We'll see if it breaks down later in the day. Volume, much, much better. This is the best volume of the day of the year so far. We're on pace for the best volume of 2010. And again, note how the market is down on that day. Now, key calls that went out. Again, we removed from the Pro Trader watch list Potash, down $6 today. That was on the Pro Trader watch list, which is part of the Research Center. That's over a $6 profit on that. In addition, Microsoft getting hammered again. We talked about taking that off and took that off, I believe, as well on the Pro Trader watch list for well over a dollar gain on the downside over since the call went out to our premium subscribers. In addition, I had posted Alcoa. Now, this is the key, guys. Alcoa, before earnings, I had posted on the hot charts and alerts, which is also included in the Research Center. And again, that was based off the key monthly chart, noting here that you were coming into major, major resistance. All right, here's the pivot low going back to 2002. See that low right here, the tail? That low just so happens to be right around $17.50. All right, guess what the high yesterday was on Alcoa? And I can go to the intraday to show you guys. Here's the high, 1760. How perfect is that? So again, on the hot charts and alerts, I pointed that out to our premium subscribers of the Research Center. They got that as well. And you can see the reversal on Alcoa. Alcoa now selling off $1.90 on the day. That's a huge sell-off for this stock, folks. Absolutely brutal. Look at the daily chart. Look at the gap down from yesterday to here. And all from analyzing the chart, you could tell there was a decent percentage chance. I think I said to the premium subscribers yesterday, there was a 70% chance of Alcoa, 65 to 70% chance of them selling off very sharply on this news based on the key technical levels that Alcoa go ahead come into. And again, this is all stuff that you get to kind of envelop yourself when you're analyzing the charts. And again, all available in the Research Center, plus 40-minute nightly videos, you name it, it's all there for the taking. You can go check it out for yourselves. But in any case, folks, just looking at some of the other charts, let's talk a little bit about the SPY. Again, I'm not going to focus on the daily. That's more for the premium guys. We focus on the intraday for you guys. If you rally up, you're going to look for major resistance at this orange trend line. Notice how the 20 is sloping down into that orange trend line. That's going to be good resistance. That's at 113.65 to 113.70. Very good resistance there if you continue up. If you start down, you're going to hit a double bottom right down here. Double bottom will be a very, very important level to watch. And again, just out of curiosity, guys, you might say, well, why is this level down here so important? If you go to the 7th, look at the low. How amazing is that, folks? The low of the day today, let me scan back again. Here's today. This is today right here. The low of the day today at 113.22 happens to coincide with a double bottom, perfect, from 107, the 7th of January, last week. That's your bottom. So do you guys see how all the charts match up? How you're always going to get a bounce based off of key technical analysis like this? And again, it's not like we're using stochastics. That's nonsense, folks. I'm telling you right now, it's utilized computer programs. Once computer programs can do this stuff, you're generally not going to lose quite a bit of accuracy on it because just too many people plug it into their systems. Once it's available for everyone, it's not going to work. Nice thing about knowing double bottoms, double tops, not a lot of people analyze that and go back multi-days on the charts and look for these key levels like we do. And that's why the accuracy here at In the Money Stocks is so key and so good, and the profits keep rolling in. All right, now a couple other things to talk about. Number one, yesterday in the intraday stock chat and last night in the Research Center video, I said, guys, I believe the top is in this market for the near term. Sure enough, yesterday we had that gap up, the rollover. That was a sharp rollover. It was out of a key channel on the intraday. Here's your channel on the intraday, lower channel, upper channel, gapped up, fell back in, rallied, touched the upper range, then look at the sell-off. We broke through, and now you broke down through that channel. I had talked about another channel. There was another channel back about a week or so, and I think it's right around here. I'll draw it in as best as I can, just quickly for you guys to analyze. But what you're seeing here is essentially another channel. Look at that, parallel lines. And again, you can see these type of channels break to the downside. Well, guess what? Broke right here, fell down sideways consolidation, and then really broke down. Guess what's happening today? Same thing. Breakdown, and look at the breakdown. This channel, channels that are angled to the upside, I would say 85% of the time or more will break to the downside. I said this to the premium members last night. Everyone had a warning to get on board on this trade. It was one of the easier trades to analyze based on the analysis that we were doing to be bearish here Friday, Monday, Tuesday of this week and really analyzing and take advantage of the fall that we're getting. The other key calls that went out, guys, I went bearish, full bearish on oil. Oil's getting smacked here. I went bearish as of this top at $41 on the USO. Since 41, it is now down $1.50 off those levels. Again, that was utilized by picking up SCO. I gave that to the chat room. I gave that to the Research Center guys when we were up at that 41 level. And again, as I said, the profits continue to roll in. Now, chart-wise, let's talk a little bit about the SPY on the... Yeah, we'll talk about the 60-minute. 60-minute, notice this pattern right here. I drew this in. This was on the 60-minute chart. You can see this pivot low, blue line right there. That's what we hit. There's your bounce. Now, let's touch on Amazon. How's Amazon doing today? Down 273. Look at the fall on Amazon, folks. Just a little over a week, basically a week and a half ago, Amazon was trading upwards of $142 per share. All right, amazing. Look at where it is now, down $1.27. There's been a sharp rollover in technology, folks. And the key here is this. I also called out this. This is the daily chart of Amazon. Look at this breakdown in play now. See this connector from this point to this point in here? You have now broken down on Amazon. Amazon's now target should be right around here. This would be first target at 125. If you get through 125, you should go to gap window here at 122.50 and then gap fill at 121. On the Amazon chart. This is all there for the taking, folks. Again, got to join up the Research Center. Get on board. The earnings now have created the volatility. Today, in my morning session, I have my show in the intraday stock chat for an hour and a half in the morning. There were probably about 6 trades that I called out, all profitable. In the morning session. That was just my half hour. Then we have an hour and a half. Then we have another hour, and I'll be going on shortly again for my afternoon show. You want to be involved in that. Again, if you don't have intraday time, you want to get on board with the Research Center. It will guide you through the murkiest of waters and come out on the other side looking like $1 million, having $1 million. Take care, folks. Have a wonderful rest of the day.